Okay, just going to get started soon, so just bear with me. Good morning, everybody. We will get started in just a little bit.
South to the land of the pines, tumbling my way into North Carolina, staring at the road, pray to God I see headlights. I made it down the coast in 17 hours, picking me a bouquet of dogwood flowers, and I'm hoping to Riley I can see my baby tonight. So rock me, mama, like a wagon wheel. Rock me, mama, any way you feel. Hey, mama, rock me. Oh, rock me, mama, like a wind and a rain. Rock me, mama, like a southbound train. Hey,
Everybody, just getting ready to get set up. Hopefully you hear me coming through now. And a little music. As I get ready.
We're running from the cold up in New England. I was born to be a fiddler in an old-time string band. My baby plays the guitar, I pick a banjo now. Oh, the North Country winters keep forgetting me. I lost my money playing poker, so I had to walk away, but I ain't turning back. Living that old life no more. So rock me, mama, like a wagon wheel. Rock me, mama, any way you feel. Hey, mama, rock me. Well, rock me, mama, like a wind and the rain. Rock me, mama, like a southbound train. Hey, mama, rock me. Well, walking to the south out of Roanoke, I caught a trucker out of Philly, had a nice long tow. But he's a heading west from the Cumberland Gap, well, Johnson City, Tennessee. I gotta get a move on, head for the sun. I hear my baby calling Riley when I know that she's the only one. And if I die in Riley, at least I will die free. So rock me, mama, like a wagon wheel. Rock me, mama, any way you feel. Hey,
We're getting close. Getting close.
well, rock me, mama, like a wind and the rain. Rock me, mama, like a southbound train. Hey, mama, rock me. So rock me, mama, like a wagon wheel. Rock me, mama, any way you feel. Hey, mama, rock me. Well, rock me, mama, like a wind and
Everybody can hear me coming through right now. I just want to make sure before I get going.
southbound train. Hey, mama, rock me.
Okay, here we are. Get ready to get going. Tuesday. It's Tuesday. Just into the London Open right now. London Open Live. I'm Joel Kruger, and let's get started. So, I guess we should start off by looking at the euro. You know, when we look at Monday price action, not a lot went on that was too exciting as far as the price action went. That I see is exciting. You know, we saw a little bit of a rally in risk markets with a disaster or fears averted over the weekend, and so that's helped a little bit to sort of get the market back up. So risk correlated assets have rallied a little bit. And we're seeing that into Tuesday. So we've seen the equity market back up towards record highs. We're seeing a dollar yen with a really big bounce on Monday after the market had broken down last week below 108. It looked like it was going to drop. But dollar yen doesn't usually like to stay down. And we saw that with dollar yen. Let's look at the euro into today, just to sort of zoom in and take a look and see what's going on here, because I think it's important to have a little perspective. Now, there's a lot of interesting things going on with the euro right now, arguing both ways. So on the one hand, you have the euro has pulled back a little bit from the recent 2017 high that was set last week. That was set at 120.93. Okay, and that was just after taking out the previous high at 2070, but not really showing any follow through and pulling back. Okay, so does this mean that the euro is going to now reverse lower significantly? No, not by any stretch. There's no confirmation of that yet. Does this mean that there's an attractive level to be selling the euro right here? Nope, not really. We could be turning lower, but I don't know. I mean, there's nothing really going on here that would make it a compelling trade. Now, so the uptrend remains firmly intact with the euro, and this is the level here. You know, that low that we saw on the 31st of August, that low comes in around, let's call it 1820. Okay, we'll call it 1820. 1820 needs to get broken, and if that gets broken, then I think we could see a reversal in the euro. Until then, those dips are going to be bought. The euro is in an uptrend, and we could be headed up higher where, well, that next measured move extension comes up about 123. And so that's, I think, the level that you need to be paid attention to. Let me just fix something here. I don't like the way that this is setting up here, so excuse me for a second while I fix this and fiddle around a little bit to try and get this a little bit better so that I don't like that white light there down there. Let's see if we can just adjust a little bit here. Make this a little bit more. Okay, that's a little bit better. Still a little bit white there, but that's okay. Anyway, so the euro, again, there's no reason to be selling, I don't think, at current levels. And as far as buying goes, we've seen a little bit of a dip, but we did see a bearish reversal day the other day, which could lead to some more downside follow-through. So kind of neither here nor there with the euro. But the daily chart is clearly supportive of the euro. Now, even though we did see a little bit of a pullback here, again, 1820 needs to be taken out. When we look at the weekly chart, okay, this is where it gets a little bit more interesting, because this right here, all of this in here, is what you're seeing is the rally that we've seen in 2017, a significant rally, taking out some major highs up here. And those highs that are taken out do suggest a structural shift. But when you look down here, the weekly chart is a little bit overbought, so a little bit stretched there, and has been warning for some time of a more significant correction. We have not seen a correction in the euro, a really decent one in 2017. Look at you see early on we saw it, but that was before the euro was really breaking out a little bit. But at this point, since going back to, like April, we haven't seen anything. So, I think that the euro is going to see a big pullback. But again, there is risk now for a move up towards 123. You have to pay attention to that. So what's my strategy with the euro? It's sideline right now. And wait to see if there's an opportunity. As a contrarian, my preferred strategy, if I'm going to take a position here, is going to be to sell. But I will not be selling anywhere around here. It would have to be up, like racing up, back above, up to these levels, maybe up towards 122, 123. So that's the story with the euro. Let me, I got to fix this because it's just driving me nuts here. So just give me a second here while I sort of fix this. So just pause and maybe ask some questions. Pretty good. Not bad. Pretty good. Okay. So let's take a look and see what we can look at here. Anybody have any questions out there? I want to see if anybody has any questions they want to ask about any currencies that they're trading right now that they're interested in. Let me go look and see what we've got. Hey Nick, I see Nick's online. There we go. Nick, are you still trading Aussie Kiwi out there? Oh, look at that. Yeah. You see, this is the thing. Like, I've got this green screen behind me, which is letting me do this, but there's like, you get these like little white spots in there because of the sun and the light, and it just drives me nuts. So yeah, I'm just trying to see if there's anything. So let me look and see. We'll take a look at some of the markets that I think are of interest today. So when you look across the markets right now for extension, the one market that's going to get a lot of attention today is this one, is the U.S. equity market, which is right back to record highs, right? The S&P 500 is actually effectively, the futures have pushed to a record high now again. And so, this trend, this never-ending trend, this uptrend that we've seen since 2009, basically going back, continues. And until this picture changes here, I don't know that much is going to happen in the market, as far as anything really interesting. We need to see that level broken to the downside here, 2,400 to get this thing going and sort of to suggest that we're seeing a shift in the structure. Until we see that break, this incredible rally could continue now. And if you actually look at this, it's kind of scary to say this, but if you look at the rally that we've seen in the S&P 500 from, let's say, roughly, let's be even conservative here, 2415 was a recent low that we saw. And then we know we have the highs up at 2490, okay? So about 75 points. So if we break up through here, oh my gosh, there's a measured move extension that takes us up to about 2565. That's crazy. But this rally has been intense, and there has been no reason to see it shift other than the fact that, of course, we need to see a reversal here. I mean, the fundamentals are begging for an adjustment in this market, but at the same time, we're not seeing that reversal, and so the trend continues to push up. Okay, gold, good. I'm getting some questions coming through. Okay, I will cover. I'm looking right now. It's driving me nuts. There we go. There you go. Okay, so that white spot is driving me nuts, but hopefully that's better. Okay, so let's see here. We got now questions coming through. Thanks, guys. Let's see here. We got Aussie Kiwi. We've got gold. We've got euro long, euro dollar, and sterling dollar. Okay. Yeah, I'm a vampire. Kind of vampire. Okay, so let's go here. Let's start with the first one, which was gold. Okay, gold is really, a good one to look at, because gold over the past, I'd say, several months has been showing signs of a sort of the formation of a longer term base. And finally kind of breaking out a little bit over here. You can see pushing up and then breaking up and taking out some key resistance at 1300. What we have now going to the daily chart is a market that I think should want to retest that 2016 high right here, which is at 1375. So the thing about gold, though, that I found as a trader, trading gold, and I've said this here in this update, is that gold is quite difficult to trade. I've found. I've bought gold. I've been buying gold for the past couple of years into some dips, like going back to, I think, like all the way back in maybe late 2016, but I've been buying gold, looking for significant upside, looking for the market to get back here. And every time I buy it, I get kind of spooked a little bit because we get these sharp pullbacks, but the market kind of adheres to what it's been, the ranges that it's been showing and the trending that it's been showing. And it's just hard, I guess, when I'm in it. I'm not a gold trader. I'm more of a currency trader. And gold, it has different. Every single market behaves differently, right? So if you trade the euro, you'll find that there are intricacies of each market that are specific to that market. If you trade the pound, there's specifics, and certainly the Swiss franc and the yen for sure, Canadian dollar for sure. So every market has its own behaviors. Aussie, Kiwi, which I'll get to, and gold, the same thing. Gold has these it really kind of moves pretty quickly, sharp and fast. We're seeing gold pull back now, and so my strategy here would be certainly to be looking to buy into a dip, because I think that we'll see a push up to 1375. Where I would buy, well, with that, and again with my strategy, I kind of like to play, kind of like thinking the girls, growing up, and that girl that you want but you can never get because she plays hard to get, or at least I couldn't. I mean, I didn't have a chance. But it's kind of the hard to get thing with the market, except in this case I'm trying to. It might sound a little strange, but I'm that lady girl playing hard to get. I don't want to I don't want to give the market attention if I'm not interested. Or even if I am interested, I don't want to let the market know I'm interested, and I want the market to sort of come to me, and I don't want to have to do any sort of going and chasing after the market. I'm going to sort of look here and say, if there's a deal to be had, then come knock on my door. Maybe the better analogy is just kind of not forcing a deal. Like anything in life, not just trading. You go out there, you're shopping, and you want something really bad. When you're younger, it's harder. You kind of just buy it because you need it. Or if you're buying a house and you want that house and you need it, you kind of get clouded by, I need to have this, and sometimes you don't make the best decision. I think the best deals in life are the ones that just come screaming to you, that where you kind of flip it around and you say, listen, man, you got a deal, then I don't like it, so you can go find somebody else. When I see a good deal, then I'll take it. So that's kind of how I trade things. I kind of look at the market and I say, yeah, I like buying gold, but I'm not going to touch gold unless it gets to a level that I think, right? So I'm going to try and set the terms. I'm going to try and dictate the terms, and that way there, I will be in control of the situation. It's a lot easier to have something not work out when you were in control of the situation. Why? Because you were thinking clearly, you kind of got what you wanted, you made the decision based on a good process, and it didn't work out. So what can you do? How can you regret? So it's the same thing with trading. So if I'm looking at gold, and I'll give you a level, I mean, just as an example. So gold is under pressure here. It very well may, you see, we're kind of the trend, this trend line here, seeing this kind of going up. So we could pull back down here, right, towards 1300. I drew a loose trend line. They're never perfect, right? Not perfect in terms of the way I draw it, but in terms of the market, right? Everybody, it's like, how thick is your pencil? People will draw trend lines to make them conform to whatever they're looking at, right? So that's kind of how it is. So anyway, it's pulling back, buying on a dip, looking for a higher low, right? So the first thing I would do is I would say, okay, what's the average range a day in gold? I look at the ATR. ATR in gold is $15. Okay, that means that over the past several days, it's 14 by default on this indicator that I'm using. You could use whatever default period you want, but This is the a default that's used. So over the past 14 days or 14 trading days, the average range is $15. Okay, so I would look at today's high right away, and I'd say, okay, today's high is 13.29. Okay, that's where it's not far away, but as of right now, today's high is 13.29. Let's call it 13.30, right? Just for making the math really simple. So 13.30 is today's high. The daily range, the average daily range is $15. I want to buy, which means that I don't want to buy higher, I want to buy lower. Okay, so I'm not concerned about if the market moves up. I'm concerned if it moves down. Well, that's what I'm looking for. So then I would say, okay, 1330 minus today's high minus the ATR, which is $15, takes us to 1315, right? So 1315, if the market trades down to 1315 today, okay, wow, it kind of coincides with this rising trend line. Okay, so this looks kind of nice, right? It looks kind of interesting. That's not it for me. So now I'm saying, okay, I'm not even gonna. Hey man, I like the idea of buying you, but you got to come down in price. I mean, I'm not gonna. I got the market. You guys are gonna be here forever, and if you ain't here today, then I don't need to buy you today, and I'll go find something else somewhere else, because there's gonna be plenty of other deals coming at me. So again, this is kind of the way I think about it. So 1315 is that first level. Then what I would do is I would go to the RSI. Okay, this is good stuff, by the way. It's so simple, and I'm giving you good stuff here. So then I would go to the RSI, and what I would do with the RSI is I would look for the market to be extended, significantly extended intraday. So if we get down to 1315 in gold today, okay, somewhere in this area here, and if that hourly RSI is extended, really extended to the downside, it's oversold, then I like taking a shot. Okay, now remember what I said yesterday. The RSI can normalize, so you can buy it when it's really extended later today, and then it doesn't do anything for a while. It consolidates, and then the RSI starts to move back up, and then you don't want to be in that trade anymore. It's not exciting anymore. But that's where you could take a shot and then sort of wait and see how the rest of the day goes. The other thing that's important to know about trading is I think it's really important to have a concept of time of day. You want to know when the active times of day are. And you also know maybe when you shouldn't trade, even if there's something really great, maybe at a certain time of day, stay away. The time of day that I think is the most tricky, where people can get sucked into trading that they shouldn't, as strong as a signal might be. Now, of course, there are exceptions, and it depends on your level of experience and so on. But I will say that the time of day that are most dangerous for traders is, we'll talk in terms of London times. So I would say any time after about, let's say, 6 p.m. London, okay, between 6 p.m. London and 10 p.m. London, even 11 p.m. London, right? You don't want to be trading, because during those hours, the New York market is kind of thinned out, and unless we're seeing some major volatility in equities, which we can see, but we haven't for years. I don't know where that is. If you look at the VIX, kind of like record lows, no volatility, record high stocks. Don't know what's going on. But if you see the market's not doing anything after those times, and that sort of block of time into the New York afternoon and early evening London, don't trade. Because again, if you look at, as far as the way that I look at things, and maybe you can relate to this, maybe you can't, but a lot of times you look at sort of for extended markets and prices, but a market that's extended today doesn't mean it's going to be a market that's extended tomorrow. So as I keep saying, if you get in at a price that looks good, well, during those hours, not a lot happens generally. So what happens is that price that looked really good at those hours, it doesn't have the benefit of moving because there's no liquidity at that time. It's not like it's 4 or 5 hours earlier when there's a lot going on. And so, on the one hand, you might be okay because, the market's not going to move, but it ain't going to probably move so much in your favor either because, and then what you're left with is a price that you thought was great, but the next day it's not great anymore. Okay, let me go back and look over here. I'm going to go to Aussie Kiwi, don't worry. I'm a gold digger. Okay, let me see here. How about Sterling breaking? I'm looking through. I'm reading through the comments. Thanks, guys. Hopefully, again, after the, I kind of like need to warm up here. Maybe I should start talking to the computer, like just talking maybe 10, 15 minutes before I start the session. So I'm like going when I get going, and then times well for the start. But okay, I want to cover those other markets that you asked about. So I want to cover Aussie Kiwi, and I want to cover I think it was cable and CAD, or cable and I think it was cable. Let me see. Let me just look back. I'm not getting off. I'm not going to jump off at half past. Don't worry. I will not jump off at half past. I know that I started the session with that intro that went over a little bit, so I'm going to keep going. So let's get to Aussie Kiwi because, again, that's one that you guys want covered, and I'm going to cover it for you. And I know that this is one of Nick's favorites, so how can I not cover it? So let's go ahead and pull that chart up. Aussie Kiwi. Here we go. Okay. Daily chart, yeah. Okay, so Aussie Kiwi, it's kind of a continuation of where things left off last week when I was talking to Nick about it, which last week when Nick was trading this, Nick, you were doing good with this last week. I don't remember where you were. I know you were short, and certainly it hasn't done anything dangerous as far as since you've been in the position. We talked about the possibility short term of a double top in Aussie Kiwi. Okay, so, and that's since playing out nicely. You can see here, double top, right? 1 and then 2, neckline, very pretty. This is like what you would put in a textbook for a double top. Well, it hasn't played out. This is kind of like that page before you turn. Like, so you have the page that says, 1, this is the possible double top. This is the beautiful textbook double top type formation. It's like really sweet. And then you turn the page, and then they show you like how it follows through the downside. I just want to go through the technicals. So when you have a double top, you look at the neckline, which is 110.20 roughly, and then you look at the top of the double top, which is around 111.50, let's call it. Again, 10.20, 11.50, 130 points. Okay, so then you're looking at 110.20 minus the 130 points, and that takes us down to about 108.90, right? So 108.90 is where you would want to be looking for this market to pull back to potentially, right? Because I always like double tops when you have a major move, right? So we have a double top, and when we meet the objective of that double top at around 108.90, we're still like ways off from coming down to the bottom of that move that preceded it. So I like that because it's a very realistic pullback. So 108.90 would be a double top objective for Aussie Kiwi. Again, the neckline we're calling it at 110.20, about 110.25, but let's call it 110.20. And so 108.90 is where we could be headed. I do say, though, with reservation, that on a medium to longer term basis, I'm a buyer of Aussie Kiwi. I continue to be. I like this market, putting in a major base here. I've talked about this for quite some time, and I've traded it buying dips for years now, and so I like that side of it. But Nick, short term, that double top does look kind of sexy, and we could see a move down towards 108.90 now. In reality, the way things happen, I know that many of you probably think this way. Oh, double top, you turn the page. Yeah, okay, yeah, you see this follow through in the textbook, but it never happens in reality. Never happens. It's like, oh, yeah, I go buy a book and it says this is supposed to happen. It doesn't. Well, that's why you kind of have to take things with a grain of salt, and you have to be very conscious of the types of setups that you have, because some people will call double top, and I don't see it. Like, I don't like the idea of a double top when you haven't had a huge move that's preceded it. So if like we were down here and we came up and we started to make a double top like right in this area here, yeah, so where's it going to fall into? It's going to fall into all this congestion here. So Please, that's not a double top. But if you have a huge move like this and then it starts to drop, you want to see that when it's dropping, there's not a lot of congestion. So in this area in here, it was kind of moving up quite sharply. So 108.90, yeah, really, really realistic. Okay, so that's Aussie Kiwi. Oh, nice, Nick. Now I'm looking at your comment, still short. Love it. So that's the story there. I think that 108.90 is realistic. Anything to talk about fundamentally there? Nothing really. I mean, I've highlighted this in recent days. You know, Australia business conditions, business confidence readings out earlier today were not good, so that's certainly contributed to this this drop. New Zealand, you know, the outlook hasn't been great at all over the past month. So the New Zealand dollar has kind of been underperforming, certainly on the commodity block, so relative to Australia and Canada. And so maybe we're in this kind of few days here where the worst has kind of been priced into New Zealand for now, and Aussie's going to start to come off a little bit. And, you know, but we still have a lot of risk to New Zealand and elections coming up, and I'm not going to get into that now. Let me just scan back and take a look and see if I can see one more thing to talk about here that you guys mentioned, because I see. Okay, someone asked about cable, so let me pull that up. Okay, Erebus, is it Erebus or Erebus? I don't know. Sorry. Let me see here. Okay, sterling yen. Crosses have been like yen crosses. I feel like yen crosses used to be so exciting. Yen crosses like 10 years ago, they were like just super exciting, and I haven't traded the yen crosses a lot. Here, let's look at cable. Okay, so cable weekly chart. Okay, so let's just talk about this for a second here. When you look at this weekly chart, it does look like it's kind of basing out, right? And when you look at this weekly chart, this was a big break. Back in April, we broke above this range high that had been in place off that Brexit low bottom. That was at 127.75. Okay, so we broke above that. I think that was a big break, huge, and I think that sort of solidified the prospect of a longer term bottom down here. Okay, so I think that the upside over medium to longer term is really strong here. Very bullish cable over the coming months and years. That being said, we're not here for coming months and years, right? Not even weeks, maybe not even days. So let's look at this. As far as cable goes, right now we've come back up towards the 2017 high that was set on the 3rd of August, okay? And we may get up there and break it over the coming sessions. I would do the same ATR trick because I don't think that cable explodes to the top side. We are overbought right now on the daily, just overbought. So not no reason to be selling this. But I would say that, you know, I see more choppy trade than a bullish breakout at this point, up towards 135. By the way, today we have inflation data out of shortly out of the UK. Going to be important to keep an eye on that. If it's above forecast, for any of you that don't watch, if it's above forecast, that would be supportive of this market. So higher. If it's below, softer than expected, down, lower. I'm not going to get into the fundamentals there. If you want that, I'll do that another time, but I think that most of you get that. So what I would do is the ATR. So ATR and cable is remarkably kind of low, but 70 points, 70 pips in cable. So the low for the day in cable right now is 131.60 about. Is that right, guys? So 131.60. So 132.30 would be the ATR projected high. Kruger ATR high is at 132.30. Okay. And so that's like that first level that I would be looking to maybe sell. It's interesting that it's there because it just kind of takes out the previous highs, so which maybe drives some people nuts that are short and have their stop above there. But, you know, again, I would go back to that RSI at that point to see if we get up to 32.30 to see what that's looking like. And then we have 32.70. So in my view, I'd probably be looking to sell up, you know, here, on a retest of the high today. So if we got up towards the high or retested or broke it right up in this area here, I think it might be a good short-term trading opportunity. I still think that we could head back down into the 127s, but again, ultimately higher, 135, 140 over the coming months. Okay, let's see here. I think that's it, guys. I'm kind of over. So let me look to fade out now, and I'll try and put some music on, but no promises. If I can get it on in time, I'll fade out. And then, again, always feel free to reach out here in my messages. If you have any questions, you want me to cover anything, lots of exciting things to talk about every day. Thanks for being on, and look forward to seeing you guys on again tomorrow. Same time, same place. Okay, let's see here. Let's see if I can get this out of here. And I got to work on this. I got to work on like my fade out,